Alright, so I took 3 trades today. I took 2 losses, 1 win. Um, and so let's just quickly go over sort of what I was looking for going into the day. Um, so I'm just sort of removing all that clutter, but basically we had news at 8:30 in the morning. So before 8:30 we were here. I guess I do kind of need my drawings. So try to ignore all of this, but we came down into consequent encroachment, so the midpoint, the 50% of this daily fair value gap. So I know there's a lot of clutter here, but this is the daily fair value gap. I have the 75, 50, 25% marked out. On its own doesn't particularly mean that much to me, but we've been generating all of this low resistance liquidity to the downside. Or sorry, all this low resistance liquidity to the upside as we've been moving down. And pretty much every time we sweep a low, we have a big bounce up, big bounce up, big bounce up. So I pretty much was anticipating at some point, we were going to run through all of this. I didn't think it was going to be today, to be honest, but 8:30 comes along, like looking at the 5 minute. So in the morning, we London low broke through the sell side, right? So London had a big move to the downside. We broke through this sell side, started to hold, consequent encroachment. There was like a 4-hour wick here. Or actually, I marked that out. But let's say like this wick, this 1 hour, we're bouncing, whatever. 8:30 comes around, and we just completely straight line to the upside. So I wasn't really, looking for something like that. I was looking for more like, a shift in market structure, maybe like here, then a pullback somewhere in a fair value gap here to like start to target this high. And the reason why I was choosing this high was just because in my mind, yes, like this might be the draw, but whenever I see like low resistance liquidity runs like this, I like to target like the highest high in the low resistance liquidity run, because I wouldn't consider this high part of the low resistance liquidity, like personally. I do think this is the draw on liquidity, but the easy high to get to was this one, right before we had a large retracement. And I think that's just like the product of all of this generated liquidity here. It's just easy to run through all of that, and then once we reached this high, we started to have some trouble. But so going into the morning, when we took that high, that was like the objective. So we took that right on market open, and if you mark out this big manipulation move, this buy side level was right in the 1 to 1.5 standard deviation. So this is like usually the area that you would see a retracement and reaccumulation of long positions before possibly going back higher. And these projections just make perfect sense, right? Like reaccumulate longs at this buy side level, right? And then bounce back up, whereas 2 to 2.5 right at the external draw. So it just makes a lot of sense. So going into the open, I was actually bearish, or I wasn't particularly bearish, but I wasn't going to the long. There was no shot I was going to take a long up here. And zooming in, there was actually a beautiful setup right in the morning, but I was just a little hesitant. I just didn't really trust it too much, and I didn't take it. So what we ended up doing, we took this high, we bounced up, failed to take this high, and so I don't normally look at YM, so I didn't notice this SMT with YM at the time, but YM ended up taking this high. ES did not take that high either at the time. But so you have all this low resistance liquidity, right? You got all the retail people chasing longs, just buying at 9:30, right? The market can't allow those people to make money, right? That's how the market goes. So the reason why I chose that low was because there's no, looking at the 5 minute, there's no imbalance here. The first imbalance is here, and you have that minor sell side level resting in there. So in my mind, I was thinking like, look, it makes total sense for us to rebalance into a fair value gap, at least here, before moving higher. This looks pretty exhausted. So I didn't take this setup. You had the silver bullet, which was the first fair value gap after 10 o'clock in the morning, in between 10 and 11. So, time and price aligns beautifully, right? So you have all this garbage price action, and then all of a sudden, right after 10 o'clock, boom, you displace down, you come back up. We pretty much, this was sort of what we held, this like inverse here. And then you had this silver bullet, and you could have just shorted right as we got near it. Not even a big stop loss, and this becomes low resistance liquidity. And literally, you had a 1 minute candle that was basically 50 points to the downside, just complete rip. Within 3 minutes of you entering, you're out and you're done for the day. So this is a beautiful trade. If somebody, if you ended up taking that, great job. That looks good. The only thing for me, I really wanted to see this high get taken, and like I said, I don't really look at YM. And even if I did see this SMT with YM, I don't know if I would have trusted that really. I just don't really have any sort of conviction with YM. I never really look at YM. So anyway, zooming out, or not zooming out, this was the first trade that I ended up taking, and I think it might have been subject to a little bit of emotion, sort of like missing out on that first trade, I guess, and maybe I was just a little bit eager to put on a trade here. But once we had that huge displacement move to the downside, I'm looking at the OTE, at least of this range, this most recent range. And so we hadn't come to discount here yet. This is discount. So I'm thinking like, all right, we might have some more room to the downside here, at least in the short term. So, we had like this 5 minute fair value gap here. We also came into this 1 minute fair value gap. And I was just way too zoomed in here. Just way too zoomed in. I was on the 15-second and saw this little model. We come up, take these highs, displacement down. We respected the first imbalance, push to the downside again. So this second 15-second imbalance right in here, I went short at. Didn't respect that at all, but we formed an SMT, like a small little SMT. So I held on to the trade, ended up failing, and basically we had two more manipulation moves here. So after seeing this, I was like, all right, I definitely don't want to trade until after lunch, because I understand you come up and take this high. Then we have this big displacement move down. You would expect that somewhere along here we would reject and continue to go further, but it ended up coming up one more time and just stop hunting that high before coming back down to these lows here. So I was like, all right, this is some manipulated price action right now. Let me just wait until after lunch. So we end up coming into OTE of this range, another SMT with YM. YM took this low. Again, I don't really look at that. It was just sort of an analysis after the fact. And we just like straight line to the upside. There really wasn't like an internal model or anything. There was like fair value gaps that you could have entered on, but it's just not my thing here. I think that is very zoomed in, just like the trade I took over here, But this would have been what made way better to take a trade that zoomed in here, because you're at least in OTE of this higher time frame range, and the overall draw and liquidity is higher. So this is definitely a better trade than this, clearly, right? But regardless, I didn't want to just like take another super zoomed in trade here, so waited. Wanted to see us maybe manipulate these lows or come down to OTE of this range before bouncing. But there was a good setup here. I didn't take this. This was a good setup. That was actually during lunch, right towards the end of lunch at 12:45. I just don't like trading during lunch. I feel like a lot of times you see the lunch high will get taken, and then it'll kind of reverse, take the lunch low or something, and then move higher. So I don't like trading during this time frame, because I feel like a lot of times you just get stop hunted before going right to where you wanted it to. But anyway, we were generating all this low resistance liquidity, all throughout the morning. Then we bounce off this 5-minute, displacement up, market structure shift. We hold that 1-minute fair value gap and then just absolutely rip up. I would have definitely taken this off at these relative equal highs here, if not like something over here, but probably these relative equal highs. So yeah, that was another great opportunity there. And these two trades I did end up taking. So this one, I wanted to see us come into this 15-minute fair value gap here. So zooming out a little bit, since we've been on the 1-minute for a while, we had this big 15-minute fair value gap, and although it's not really that clean, this is technically your like unicorn. This is like your breaker, the last up close candle before you took liquidity, rebalanced, and then bounced to the upside. So this is your breaker. So although I would have wanted to see us retrace some more, I didn't think there was any reason for us to retrace. We have this breaker, we formed these internal models, respected all these fair value gaps, really strong push out of OTE of the range. Why would we retrace again? We already went to OTE. We don't have to go to OTE again, So if this is true buy side of the curve, you're just going to start respecting bullish fair value gaps, bullish imbalances, right? Bullish PD arrays. You're just going to respect all of them and go to the draw. That's how the buy model works. So buy side of the curve. So once we came to OTE and ripped, I marked that 15-minute fair value gap out, and I really wanted to see that hold. Looking at the 5, this is like the 5-minute breaker, these two lines here, and then you have this 5-minute fair value gap, which is the 5-minute unicorn. So this area I wanted to see us bounce from, but I got a little, like, I saw SMT at the lows here, and I was on a 1-minute chart, and I don't think this is a bad trade. We had an SMT here, and then we have this little internal model. So we come down, we bounce, take this internal liquidity, bounce, Then we had this initial fair value gap, which, you know, the wicks do the damage, but we ended up respecting it. Boom, another big displacement move. So I was thinking, you know, maybe we just never retrace. Maybe we're that bullish that we just never retrace back into this. And I think this fair value gap and entry looked good. You know, I took the entry right in here. It respected it to a T, bounced, but then we ended up falling and almost stopping me out before ripping up, taking out this most recent high. But I was targeting that external draw, and I think there were two things that I did wrong here. The first one is the timing. So if you're looking at the timing, I mean, it's not bad because, you know, this is 150, right? You know, the end of the hour macro, you're going into 2 o'clock, right? Where you expect, you know, this is like, right when you hit 2 o'clock, this is sort of your silver bullet hour in here, you know, 2 to 3. And so for the PM session, so, you know, once you sort of like inverse this 1 minute, you would expect that area to hold. So I don't think it's bad. But normally, if we take out the most recent swing high, I move my stop to break even for reasons like this, right? It's very possible you could take out this high and go and move to the downside and search for sell side, right? You just took out buy side. You might end up looking for sell side after. But the reason why I didn't do that was because looking at OTE of the range, you know, who's to say we're not going to come down into discount, into OTE, maybe tap this 1 minute again and bounce, maybe come back to this inverse and bounce, right? So that I didn't want to move my stop to break even. So I think I did a good play. I moved my stop up to just below OTE, which was this swing low as well, or not really swing low, but like this most recent low, which was, you know, a tiny stop, you know, around a 5-point stop. So I cut my risk in half, and it ended up being a very small loss, like a $10 loss. So I'm okay with that because, you know, I really do think we could have came down and respected this inverse and sort of chopped around in here maybe and then bounced. So I don't have a problem with this loss. Right, so after those two losses, I was down like $36 on the day. So I was like, all right, if I'm willing to take one more setup if it looks good. And sure enough, we come down into that 15-minute, you know, taking all of this sell side liquidity, and then right when we bounce, you know, it's 256. This fair value gap was created, and just after 3 o'clock is when we really dig into it before ripping to the upside, you know, for an expansion move at the end of the day. So this to me was pretty clear. I mean, you know, taking out this liquidity, we bounce. You know, there was probably 30-second or 15-second fair value gap in here that we respected. Rip to the upside, you know, clear shift in market structure to the upside. You know, you have an inverse here, you have that 1 minute. You know, to me this is clear. I actually ended up longing right when we tapped into this though, on that first wick. We tapped into it. We ended up coming down and digging into it one more time before expanding to the upside, and I left my runner through this high. Won't lie, I was a little afraid of that, but I really thought like end of the day we're just going to expand and go take out the draw, like right at the end of the day, and that's what we did. So ended up exiting my position right around 350 at the end of the day. This was a great trade here. and I was able to wipe out, all of my losses and make a decent chunk of change. But I think overall, I definitely shouldn't have taken this, and I'm okay with this trade. But either way, it would have been like a $10 loss, and then this was almost $100 winner. So like I shouldn't have taken this loss. This one was a little too zoomed in. I'm okay with not taking this because I don't like trading during lunch. That's fine. This I'm okay with. Tight stop, 10-point stop, and then it ended up being a 5-point stop. Stopped out, and then ending the day with this. So I don't think I traded bad. I'm okay with not taking this because it just wasn't what I wanted to see. I wanted to see these highs get taken. They didn't, so I didn't pull the trigger. I'm okay with that. This was sort of like FOMO though, because I didn't take this trade. So yeah, like I was saying, this trade should not have happened. Okay with not taking this, and I'm totally okay with both of these trades. Either way, I think performance was not bad today. Wasn't the best. Of course, I can, improve in a ton of different ways, but, not bad. Last day of the month, did pretty well this month. So, just got to keep grinding, got to keep gaining experience and journaling and trying to improve on the things that I'm doing wrong, and get more disciplined. Try not to do anything FOMO related like this, and hesitation to enter like this. Things like that where maybe I enter too late, or I'm just sort of skeptical, and I just need to keep focusing on the psychology and just letting the experience build, right? So with that, hope you guys made some money. If I take a trade tomorrow, I'll make another video. So with that, peace out. Have a good night.